Hello, everyone. Welcome to another exciting edition of School for Startups Wealth Within Update. We're excited today to have Janine Cox with us. She is the senior analyst there at Wealth Within. Our normal Dale Gillum is on vacation, and we're begging the production staff to insert the picture of him right here now, of him wearing a wig on vacation that we got sent today. So anyway, Janine, welcome to the show today. How are you doing?
Great, thanks. And I take your point about normal Dale. There is no normal. Dale's a bit out of the box, and that's why a lot of people follow him.
Well, that's very true. His thinking is unusual. And we got to start off and say this. He was wrong this week. Both of us were wrong this week. Janine, we predicted sort of a down week. And boy, yes, were we wrong by that, weren't we?
Yeah, the market's done a bit of a flip, hasn't it? And it's now moving back up strongly. And I think Americans should be really excited about the market at the moment. And looking at the way that it's unfolding, okay, it was a topsy-turvy market last month with the Dow pushing back strongly, but it closed up quite firmly. And now we're seeing it well above 27,000 points, 27,347 points I think you were at on Friday.
Right. So the Dow was up over 1.1%, and both the Standard & Poor's 500 and NASDAQ hit new all-time highs. How does this position us for next week? And what happens if the trade negotiations all of a sudden fall apart? If they don't sign this phase one that sort of set the market off, what happens?
Yeah, I think there's a bit more certainty now, and I think that's what the market's actually showing. I mean, over the past few months, the Dow's actually been trying to push higher, and it's actually well above the 2018 high. And I don't think that the trade talks are going to cause too much volatility anyway in the short term at the moment. I think we're starting to see some agreement now, and the market's factoring all of that in, and hence the reason for the turnaround. It's not to say that the market won't have some ups and downs, particularly downs at some point along the way. And it's interesting to see the Chinese come out saying how it's all positive, and then the US come out with a little bit more of a cautionary tone, saying that there's still a few things to sort out. So I think it's probably going to be reasonably steady for the next few weeks. And I think next week we'd probably see the market move up again.
That would be unbelievable. With all of the political turmoil here going on in the States, to see the market just totally disregard it, it's unbelievable. The employment data did come out, though, Friday, and it was very strong, 130,000 new jobs, I think. The rate went up a tiny bit, but that was a statistical frequency weird thing, I think. Do you think that the economic data points to any negative recessionary signs at all? I just don't see any negative data out there at all.
No, I think the doomsdayers have been they're wrong. I think looking at the economy and the market as an indicator of how the economy is doing is showing strength. And I don't think it's going to matter too much moving forward now, even if some of the data does show to the negative side. Your economy's doing pretty well and steady as she goes at the moment, I'd say.
It is. It's unbelievable. And looks like it's just going to continue on for quite a while, I think. Let's switch topics just a little bit. Which particular sectors were interesting Friday? Who were our big winners and losers?
Yeah, look, I think that it's getting quite exciting across the market. So the broader market, as you said, was up around 1%. The biggest gains were energy up 2.5%, industrials 2.2%. Materials actually put on 1.5%, and the financials were up 1.4%. And it's always good to see those financial stocks moving forward. So there's the winners and the biggest losers we've also got as well, which were utilities down 0.2% and real estate dropped by 0.28%. But that's more or less benign, really, when you consider some of the bigger moves that we've seen on the market in the past. So it's looking quite good. And looking across the sectors of your market, it's more or less a sea of green at the moment, and same with a lot of the stocks. So investors are really going to be excited about this, I think, moving forward. But one of the things with real estate, I mean, although it dropped 0.28%, you have to consider and put it in perspective that it has actually been one of the strongest sectors of the market.
Right. Well, I am. I'm looking at the chart right now. and it is a sea of green, absolutely everything. But we still have, as always, the people who are shorting the market. Let's talk about that for a second, or just the people who are naysayers and say that the market's in for an absolute crash and they're going to lose absolutely everything. First, let's define shorting the market so everyone understands that, Janine.
Yeah, look, shorting is a really interesting area. Now, some of your listeners may already be shorting stocks or the market, and this is about actually selling before you buy. It sounds a little bit odd. Some people used to say it sounds a little bit Irish. Sorry to any Irish people out there listening, where you're actually selling first and then buying the stock back later. Now, I mean, your market has been so strong. So even though it's been sideways, it's still been going up overall. So up around 13% for the 1 year return figures to October. But look, I'd say that with the short sellers, there's been a lot of stocks, big stocks actually, that have been, there's been big positions on these stocks over time. There's actually a list of the top 10 most shorted stocks, and one of those is actually Tesla, which is interesting. Is that a stock that you follow particularly?
Well, of course, and I follow Tesla cars all of the time. Unfortunately, I don't have one yet. It's such an interesting thing that it's the coolest car to have in the United States, of course, but it's still not a stock that I would want to own. I think it's just incredibly overvalued, personally.
Well, look, maybe I'm going to change some people's minds here, because in terms of Tesla, yes, okay, we've seen this huge rise in the share price of the stock just recently on their report, because they reported on the positive side. So a nice little profit instead of a loss, which is what a lot of analysts were expecting. So given that happened, we saw the short sellers who were really heavy in the market. So a lot of the hedge funds and shorts and big financial institutions were short selling the stock. But the crazy thing is that the chart was actually telling them that the stock's going the other way. So this is where I say to people, be really careful about the fundamentals, which usually lag what's going on, and look at where the money's actually flowing by looking at the charts. And you'll see that for weeks prior to the big rise that happened on the market, you would have been able to buy the stock. There were signals to get you into Tesla before that. So I'm pretty excited about Tesla in the bigger picture sense, because it has been trading sideways in the big picture sense for a long time, and still below the all-time high that happened in the GFC. But I think with this recent move and just the things that are coming out of Tesla at the moment, I'd expect that there's more positive news for the upside. We may see some short-term profit takers take the stock back. And interestingly, the big short sellers, some of the big fund managers, are still holding on to their positions in spite of this recent big rise that we've seen. I mean, at one stage, Tesla, the shorts that were on the stock, it was about 25%, I think, of the stock, which is huge. And so you can imagine the sort of fall that could have followed if Tesla reported bad news, but they've reported to the contrary. So I actually like the stock long term now, which is before I was only thinking that stock might move up short term, and we could see, as I said, a short term drop before the next rise unfolds.
Well, I think the significant thing is, according to Elon Musk, that they're going to be focusing on the 3 Series more, which is supposedly their middle class car that all of us can afford. And if they can start figuring out how to get that out the door in the numbers that they're projecting, then they look fantastic for the long term. But they haven't done that yet. Yeah. They're still having a little trouble with that car, from my understanding. So,
look, I think the whole solar and the whole electric car industry is really exciting for Tesla. And by 2030, they're saying that around 20% of all vehicles will be electric cars. So it's a big jump that we're going to see in this area. I don't know about you. Are you thinking about picking up one at some stage? What if they price the new model at the right level?
At our house, we buy 5-year-old cars for cash. So the last car I bought was a 2012 Highlander hybrid, and it has the thing where it turns off and it goes electric, and it just scares the daylights out of me, because you're going along with gas, and all of a sudden the gas engine turns off and you're on electric only, and I'm like, oh no, I ran out of gas. There I am. The kids and I are going to starve to death in the middle of the desert.
And you're stuck.
Yes.
Yep.
But I'm proud of myself. We paid cash for the car, and
Fantastic.
isn't that the way my financial advisor told me to do it?
Yeah, look, I mean, I was always taught that too with depreciating assets. Go for the cash payments. Don't save up for it and pay for it. Don't get it in credit or borrow for it. Yep.
Exactly. So we were proud to pay under $12,000 for the car. We thought we got a steal. It's in amazing condition. I'm still proud of it. So anyway, people, we alluded to this earlier, not only the short sellers, but just these people who think they're going to lose everything in the big crash, right? Everything's great now. We always have ugly, time right around Christmas, perhaps. November can be ugly, October. I'm going to lose it all, Janine. I'm going to lose everything.
Yes, and it's good that you've raised this point, because I've had a few people bring this up. Even in Australia, they've been talking about it, because there's always the doomsdayers, doesn't matter what country it is. And looking at their thoughts and their theories about it, they're basing their fears on nothing. So fear is the false evidence appearing real. That's what it stands for. And the reality is, the statistics have historically said that there's less than 1% probability of what you fear the worst is likely to happen. It's unlikely. So, that's the reality of it. I think it could actually have risen up to 3% in someone's research more recently, but hey, it's such a small figure. So therefore, what's positive is actually more likely to occur. So stick with that, I'd say. And so therefore, looking at the market, likely to continue to rise. I don't think people have to fear losing it all, and it's literally impossible to lose everything unless you're leveraged to the hilt. And why would you be? Because if you're using leverage, you should have much more knowledge, because the higher risk you're taking in the market is sort of proportional to the level of knowledge that you need to have. And we often say to people, learn to drive the Mini before you try to drive the Ferrari. So the leveraged markets are more like trying to drive the Ferrari first, and you're going to blow up the gearbox if you haven't learned how to drive properly first.
But then we have these Teslas that drive themselves, and the stock analysts that we watch on the news channel, and they tell us very clearly that the end of time is coming. So I mean that's the prognostication that makes the most money, I think.
Yeah, I agree. And look, when markets are going to their tops, do we hear that fear-mongering as much? And I'd say it's drowned out by all of the positive news more so than the negative. So it's really important for traders and investors just to remind themselves of that, and don't trade on speculation. Use confirmation, proper solid rules. I mean, I could show you, if we looked at a chart of Tesla, you could see where that there was actually some really strong opportunities coming into the stock there, and yet the stock's risen nicely. You would have made a nice profit. But if you stuck with what the doomsdayers were saying, then, if you were trying to short it, then you would be in loss right now. So I think that illustrates a point, is just don't pay any attention to what the media is saying at the moment. I think that your market's quite strong, and the chances of you losing it all, there's so many signals that the market will give you technically to tell you that it's going down. But for those people who are subscribing to the fearmongers, it's probably because you don't have enough knowledge, and that's, I guess, the yardstick for you to remind you of where you're at, really.
And also, I think a lot depends here on which media you listen to in the United States. Some of the media is very upbeat, and some is very negative at the moment. So I think that's a big part of it as well. All right, let's wrap it up. Janine, what do we see for the next week? What's our big takeaway for the week?
Look, I think that one of the things to look at is some of the sectors that have been doing quite well is to stick with those, and they will continue to rise because the biggest sectors on the market are going to push the market higher. So that's what you've got to be looking at when you're looking at where to invest your money into the US market. But investors generally will do quite well if they're sticking with the top stocks on the market, and that makes it easier. So choose some stocks out of the Dow. But I think the market over the next week's likely to move up, and I think we're going to see a continuation of that trend over the coming months and into 2020. But remembering there'll be a little bit of volatility that you'll have to hang on to your hat for. However, I don't think it's going to be too much to be concerned about for you guys over there.
Fantastic. Again, Janine Cox, thank you so much for being with us. You can learn more, of course, at wealthwithin.us to find out all of Janine and Dale, the missing Dale, all of their blogs, videos, and all of that. Make sure you check out the YouTube channel as well. Janine, have a great week. Take care, and we'll talk to you again soon.
Thank you. You take care too, and bye for now.
And we will be back next week.
Please remember that this report is an educational tool. While Wealth Within holds an Australian Financial Services licence, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Okay, so let's take a look at the US market. And here I've got a chart of the Dow. It's been moving up quite well so far this month. We've seen a small gain there on Friday, and looking at what happened last month, we can see a big volatility. Now, a lot of this has been because of what's happening with the US and Chinese trade wars that have been on. We know that this is improving. We're starting to see some agreement between both sides. We could still see a number of months where they've got to hustle out the different aspects of this trade agreement coming through. Now, looking at what's happening on the market, we've seen a lot of closes around this 26,700 point mark, 26,800 point mark. And that means that we're getting some sort of equilibrium between the buyers and the sellers coming through to the market. What's positive about the US market, and has been for a while now, for a couple of months, is the fact that we've seen it trade above this October 2018 high, and I think that was really significant for the US market. And we've been saying for some time that the US market is likely to continue to rise, but there's been a lot of naysayers out there who have been talking about a big pullback on the market because of what's been going on with the US and Chinese trade wars. But despite all of that, the US market is just edging up ever so gradually. I believe that it will burst out of the blocks soon. We could see it head up towards the 30,000 point mark very soon, and over into 2020. But remember, January can often be a volatile time, so we could see a little bit of volatility come back into the market then, and hopefully a nice rally into Christmas. So far, everything's setting up nicely for that. Looking at the stocks in the Dow, just to get an idea of what's going on, we can see it's majority in the green at the moment. So we've got some really good moves by some of the big stocks. So Caterpillar looking really nice. It was up almost 5% there for the month. Now, looking at what happened last week, if we go back to the weekly figures, we can see it's a bit of a sea of green. There's not many in the red at the moment, so just a handful of stocks in the red, and that looks really good for the Dow. So we should see a lot of those actually continue to move up over time to push the market higher. Now, I'll just move on to some questions, and thank you very much for sending your questions in. The first one's from Jamin Woodcock, who says, "Hey Dale, I cannot thank you enough for providing your wisdom to us all for free. I wanted to hear your opinion on AT&T. I entered about 2 months ago at 35.20, and I can see it's meeting some resistance as it's gone sideways the last 6 weeks. Do you take loss of subscribers on streaming and TV to be a big deal?" Well, look, I know that there's been a bit of volatility there. However, I don't see that as being a complete deal breaker for this stock, and I think that there are periods of time when certain stocks will actually trade down. I'm going to bring up the chart now there for you, and then they'll turn around, and we can see there that this stock has actually been trading up quite strongly. So looking at the low that we've seen here in December 2018, the stock's actually pushed up. Every month has been it's been a sea of green. Nice looking rise on the stock overall. So investors would probably be pretty happy and breathing a bit of a sigh of relief. But it's not really the sort of stock you want to buy and hold. I mean, look at what it did from July 2012. More or less traded down gradually over time into this low in August 15, and then burst out of the blocks again through the all-time high in July 16. But it really hasn't gotten on much since the GFC in 2007. But this could be the real game changer that we've seen on this stock. Looking at what's happened over the past 6 months or so, I think it's in new territory actually, and I'd say that there's going to be more positive moves on this stock over time, and I'd expect to see it eventually break through this high up here that occurred in July 2016. So I think it looks really good. I'll just switch to the weekly chart so we can have a bit better or closer look at what's going on there more shorter term. And you can see there's been a lot of consolidation that's happening with US reporting season going on. It's always a more volatile time. And in fact, looking at it the week before last, week ending 25th of October, you can see how it actually closed low on the bar there. So it looks like some big market players might have been having a bit of shenanigans there that week with this particular stock, because to see it then reverse and continue up strongly after that is just quite odd. It's not a normal sort of a formation. I think there must have been some tinkering going on there in the market. And you can often see that where a stock pulls back strongly and then reverses shortly after. And we've seen it do this a number of times. Look back here in April 2019, the big pullback there. This sort of a basing pattern that we've seen at the bottom here is really important for a stock when it's turning a corner. It's showing all the signs of a stock that's likely to continue to rise. But in the short term, we really need to see it kick on. You can see here over time there's been a fair amount of resistance around that $39 mark. So it may actually meet resistance there temporarily before it pushes back up. So I think this is a good looking stock, and I like it. I'm not suggesting or making personal recommendations to buy particular stocks, because that's not my area of qualification. I'm actually a portfolio manager, and looking at this particular one, would I have it in the portfolio? I'd say it's actually a good stock to have in a portfolio that you're looking for a growth type strategy. So that's the question there. Thank you very much for that, and it's a really good question that you had on this stock. The second question comes from H-Man, who asks, what are your thoughts on Disney? Well, if you're asking me personally what I think about Disney, quite excited when I went to Disneyland some years ago. A big fan of Disney actually, and their movies as a child. And this is the sort of stock that's really quite awesome for kids if you're trying to get them interested in portfolios and stocks and the financial side of things. It's something that they can relate to. So it's one that to have on the list definitely. But look, even a stock like this from July 2015 through to just more recently in April, the stock was really going sideways. It hadn't really gained much for a long period of time. Perhaps you'll get some dividends in there, and there might have been some corporate actions. I know that there are some companies that are actually producing some really interesting corporate actions at the moment, and there's a lot of investors taking advantage of that. But look, with Disney, this big move up is really the game changer for Disney and helped it break out of the blocks, this sideways move where it was locked in. But you can see here it was actually getting to an apex. Notice how the lows were getting higher and the highs were actually narrowing down. That's often a telltale sign that a stock's going to break out, and it may be a more sustainable rise that we see on Disney from there. But at the moment, it's pulled back. It's poised for another move up, and I think if I was holding this stock, I'd actually be quite pleased about this at the moment. There have been a few rules to exit it if you were trading more short to medium term, but if you're looking more longer term, then there's currently no rule to exit the stock, and it's just showing a nice medium to long term uptrend in play at the moment. So I like Disney. I'd say that it's going to move up to try to challenge 142 over the short term. There's a bit of resistance there, so we'll just wait and see what it does around 140, 142 when it rises up there. But if it goes through this high here, this short-term high here, $1.33, then the probability that it'll get to 140 to 142 is reasonably high. So again, I like Disney as a stock. There is a short-term downside risk. If it comes back below this 127, that's a fairly important level for it as well, then we could see it come back and find support closer to 120 or 117 before it eventually moves up again. But if it did come back to that level, then there would be some good opportunities to get into the stock after that point. Now, looking at another stock which I have here, which is Tesla, I thought this would be a really interesting conversation piece to have, because Tesla's been in the news a lot, and when isn't it in the news actually? And it always is a good talking point around the dinner table, because a lot of people are interested in the electric cars, and also they make solar panels, which, if you're looking for solar for your house, then they produce some really fantastic equipment. But looking at Tesla, there was a recent story which I thought was quite interesting about Top Gear, which I don't know if many of you are fans of Top Gear, but I'd have to admit that I'm a little bit of a rev head myself. So I have watched a lot of Top Gear over the years, and recently Top Gear actually said that their electric car, the sports car that Tesla make, actually didn't perform as well as the Porsche in its equivalent category, and I think that Tesla came out and were objecting to their reports and saying, well, that they didn't actually have the car set on the right settings, and therefore it underperformed because of the way they were driving it. And Top Gear came out and challenged that by saying that they did actually set it correctly. So look, there's a little bit of banter going on in the media about this, which is quite interesting. But looking at Tesla, one of the fantastic things about it is it's actually defied a lot of the analyst expectations. So analysts were thinking that it would actually come in with a loss, and has recently reported a profit to surprise the market. Now, this has actually caused an interesting situation on the market, because what happens often is if analysts are expecting downside, there's a lot of hedge funds and people short selling, trying to take advantage of any potential bad news that might come out. And that's what the market was expecting. But you see, these people are all looking at fundamentals, and they're looking at past, right? They're not looking at the charts often. And so that's where the background of the industry has been predominantly over many, many decades. But if you look here in October, early October, you can see this consolidation happening sideways. And it wasn't until this Friday, the 11th of October, the week ending, that it actually started to indicate that, hey, this stock's really likely to kick on, because it actually moved up really strongly week ending 13th of September. And at that point, I thought, well, Tesla is, we're about to clap our hands for Tesla, because it looks like it's going to take off. So what are all these naysayers talking about? And I think at the time there were about 25% of the stock was actually there were short sellers over about 25% of the stock. So that's really huge when you consider it. I think it was the second largest shorted stock on the market there for a time. And then what's happened is, with the positive news that's come out, there's been what we call a short squeeze, where a lot of the hedge funds or institutions got squeezed out of the stock and had to buy the stock back to close their short positions, helping to push the share price up. And I'm sure there were a few buyers in there as well, seeing the opportunity if they were looking at the charts. And this is why it's so important that you don't listen to what people or commentary is saying about a stock, that you actually just look at where's the money flowing. And once you actually can learn to read a chart, study the stocks. And I remember seeing this for the first time, I won't say how long ago, because that would probably give you an indication of my age. However, it was a long time ago, and then I realised that, hey, I'm missing out here, and I need to get a proper education and learn how to read the charts myself. And you'll find that you'll be ahead of the big boys in this game, and you'll be able to take advantage of some of these moves on the market and be in there before they actually are, if you have the right knowledge. So just remember that, and we can help you with that if that's what you're after. So looking at the stock, you can see week ending 18th of October, it moved up. Lots of reasons to be buying it at that point, and then the big move that followed. So there was plenty of time to actually get in and take advantage of that boom that happened. So I'd just say a big thumbs up to Tesla, because they're actually doing something great for the environment as well as potentially for your hip pocket. So that's all that I've got on the stocks and the market today, and I hope you enjoyed the discussion, and thanks very much for sending in your questions. Thanks for watching until the end of the video. Now, if you have any questions that you'd like Dale or I to answer, just stick them below. We'll answer them, so get typing. Remember, we do these reports every week, so hit the subscribe button now. Click the bell on the right of it, so that way that you know when we go live. Now, I had someone recently say to me, thanks so much for actually giving us the opportunity to subscribe so that we can get the reminders. It makes it so much easier. I'm Janine Cox. Goodbye, good luck, and good trading.